Okay. We are happening.
Which headset you want to use? White? Black? Okay.
Whitey. You guys ready?
I think so.
We'll get this headset on. Okay, Pinky?
Yep.
Sure.
Just right.
All right.
There we go.
Yep.
Alright. We don't have too many announcements, so it'll be a nice long segment for you guys.
Oh, great. The day I bring the least material.
No!
You got some lead-in stuff there? I know you usually bring a ton of shit.
I left my folder at home. It's been one of those.
Well, let's
weeks.
just make it up as we go.
Make it up as we go. I think I got some general broad topics.
Your general thoughts, you want to start off?
Sure.
Well, if you don't want to, I can, but
Well, I think we can toss it back.
yeah, sure.
Well, who do I lead in with?
So you can lead it with me.
All right. Here we go. Welcome. You're listening to The Best of Investing on Talk 910. I'm your host, Edward Brown. I'm proud to have as my co-host Mark Hanf of Pacific Private Money, one of California's fastest growing mortgage investment firms, and Rob Spinoza of RPM Mortgage. Our phone number is 888-912-1190. Use that number to answer the trivia questions for 3 vacations during this show. Those vacations are not sponsored by the radio station, but by Lighthouse Resort and Marina, located about 1 hour northeast of San Francisco. Those vacations are free. Their only request is a $100 cleaning fee to cover the housekeeping expenses. And today's trivia theme, again, just various trivia. We're going to keep you guys in suspense. Our website is bestinvesting.com. And Rob, why don't you take it away?
Hey, so what I've noticed out there, Mark and Edward, I was wondering if you guys are hearing the same sort of stuff. So it's officially summer now, right? Summer solstice is
That's
behind us.
right.
And the long days are long. But what I'm hearing a lot of is, a lot of real estate agents and a lot of buyers are wondering, hey, is the real estate market slowing down?
That's the word on the street.
Right, it's word on the street, and I even saw something from Trulia today that says, a broad headline saying Trulia believes market is slowing down. What do you guys make of that? What are you sensing on the street, number one?
Yeah.
And number two, do you think it's substantiated?
Well, here was the newspaper article this past week, and of course we live in Marin here, and
Right.
Marin IJ led with housing prices at an all-time high.
Okay.
Of course, they're basing that off the median price.
Right.
So the median price of a home in Marin, 1.2 million,
Yeah.
depending on whether you include condos or not.
Right.
Basically, right? I'm assuming the 1.2 is sans condos.
Yeah.
And the unit volume has fallen substantially, and I hate using the median price. I think that's the most
Very misleading, yeah, I agree.
statistic to use, and yet the media loves it. So
Half above, half
right.
below.
So if you believe
the
the media, and if you believe the article, it would suggest that the housing market is A, still on fire, B, still appreciating, at an all-time crazy rate. But the reality of it is, and listeners to the show have heard some of our past co-hosts, like Patty Cohn of Pacific Union,
Yep.
another person like yourself who's on the streets there and the front lines of what's happening. And that's just that article from this past week of housing prices and median prices going up. That's not what's really happening in the marketplace. Now, I as a lender, and you as a lender too, Rob, we're seeing that there are markets and neighborhoods in the Bay Area that haven't
Absolutely.
slowed down
Right.
a bit.
Right.
And those are typically the under $1 million markets in the outer Bay Area, and maybe the $1 to $2 million markets in the higher priced areas of, say, Marin County, San Francisco,
Correct.
Silicon Valley.
Yep.
But above $2 million in most
Yes.
markets in the Bay Area, it has come to a screeching halt, according to the people I'm talking to.
Yeah, and one of the interesting things I've noticed about that, you do hit the nail on the head with that piece. I think there's widespread agreement in that segment of the market Also, one to include it where you are still seeing a lot of momentum are areas with especially constrained inventory. So you have a lot of people looking for a few homes, and then there's just not a lot of homes for sale. Above 2 million, where you start getting into issues there, you have a very select buyer pool, number one, and number two, you're also dealing with pricing the property correctly, because if you're looking backwards, if you're a real estate agent and you're pricing the property under the assumption you're going to garner the same interest you had a few months ago, you may be unpleasantly surprised. I also have noticed throughout the course of the year, and it's sort of coming to a head now, but through the course of the year, those numbers that you brought up, Mark, have been down incrementally over previous few years. So just the number of units sold. And then you're going into the summer. So, what we see a lot of is people's mindsets just aren't what they were in February and May, for example. In February, you're dealing with a scarcity of property on the market, not a lot of homes for sale, a lot of clamoring for the ones that are good. Then when you go into spring, you have your traditional spring buyer season, and everybody is worked up about that. More homes come on the market.
At least the agents are, anyway.
The agents especially
and the mortgage brokers, too.
Yeah, we like that period of time.
Were the buyers worked up? I don't know so much. I think it was a little bit of a disappointment this spring.
And it was, the numbers were slightly off, but now you're going into summer where now this period of the year especially, I think, kids out of school, people thinking about vacation, and I think it plays into that whole idea that the market is slowing down. Fundamentally, what I see amongst my clients and the general broader market is that still a lot of buyers competing for good homes, willing to compete for good homes, and still you have a very, very competitive market in terms of getting a home loan. It's not like years past. We're not going back to 2006, 2007, 2008. It's just not the same set of circumstances.
Well, here's an anecdotal story for you. So I have a borrower who I made a loan to for a new construction in Mill Valley, and it ran long. He was supposed to have it on the market at the end of last summer, and he was told, based on the square footage and the hot market that we had at the time in Mill Valley, that he should get somewhere around $3.3 million for this house. So he just put it on the market. I would say maybe it's been 60 days now at 3.3, and the highest offer he's got is 2.5.
Wow!
And his agents are telling him, you need to drop that price. And it's funny because we've had we've talked on the show before about strategies for marketing your home. That the worst thing to do is to overprice it and have it sit. That you might actually make more money if you underprice it and then you get multiple bids. You can make more money that way than if you put a higher price, then you have to keep going back down. There's something about the way overpricing real estate taints the market. It doesn't make logical sense, but it's an emotional issue.
Yeah, because if you underprice it and you get multiple offers and they're still not high enough, you don't have to accept it.
Well, but the reality of it is study after study has shown that, particularly in San Francisco where they do this all the time, is that you will get on average a higher price if you list it low to generate activity versus list it high. The very same house with two different pricing strategies, you will net more money ultimately in your sale if you underprice it than overprice it. So, so anyway,
it's hard to do it.
It's hard to do it. It's hard to do it. So, but this poor fellow who I made the loan to, now he's looking at, based on how much it costs to build a house, the debt that he has on it, and
he goes back to book value, basically.
Right, he's looking at losing his personal investment, and so this is not going to be a successful flip for him. And I've heard also from other, Southern Marin realtors that the high end, those high end homes in Mill Valley and Sausalito, there's a lot more inventory, and they're starting to sit. And so we're seeing that in other pockets. Not again, there's neighborhoods in San Francisco that are still hot. Silicon Valley, we're starting to see some backtracking in pricing.
But here's what happens with that, which is an interesting dynamic psychologically as well, is when people get the sense that that's what the market is, they have the power to make that the market. So basically, if you start seeing those above 3 million properties sit, maybe if you even are a committed offer, you kind of step back a second and wait, play your cards. If you've got a good agent, they may be advising you, hey, keep your powder dry and let's see what happens with this thing.
Well, let me ask you on that specific loan. How much of a loan did you make on that?
It's not going to make any sense to you because there's actually multiple loans on it. He has
Got
a
it.
first, a second, a
Yeah.
third, a fourth, a fifth. He's got equity JV partners that it's too complex to even get into. I just
Wow.
happen to know I have an $800,000 first
There you
against
go.
a three. That's the meat
That's
of it.
what
Is
we care
I've got an $800,000 first on a a $2.5 million
Right.
property.
You know what I was going to say?
He was
You-
hoping
you-
I was gonna get $3.5
In other words, you sleep in well.
I sleep very. Yeah, I'm
Yeah.
not worried. It's the guys who are in junior
third,
position to me that are the ones that are getting a little bit anxious right now.
You know, so we get asked this question a lot on the residential mortgage side because people go, well, you know, I had my house on the market and it didn't sell, and I'll say, you know, what did you have the house on the market for? Did you have it listed? Yeah, I had it listed. What did you have it listed at? And they'll be like, well, I had it listed at whatever. Pick a number, $1.2 million. Did it sell? No. Okay. Your appraisal? I don't care if your appraisal comes in $1.4 million. It's $1.2 million.
Yeah.
Didn't sell. You know what I mean? So it's like we have a number of different fallbacks in our business that basically protect the lender. The most common one is purchase price versus appraised value. I don't think everybody knows this, but if you go into contract for a place for $1 million and it appraises for 900, it's 900 in the lender's eyes. Loan to value is based off is based off of 900, even if you continue to pay $1 million for it. So you know, it just goes to show what the value is.
Yeah.
And we talk about that on the other side all the time too. We say, you know, value is what someone is willing to pay.
Right.
Well, the inverse is true too. Value is what someone is not willing to pay. You
So,
know?
Raul, let me ask you. I'm a hard money mortgage broker. You're a conventional mortgage broker. If the market is in fact slowing, and it's actually not even an if, we're already seeing signs that the market is slowing, and it starts with certain neighborhoods, certain sectors of the market, and then usually the rest follows. Are you comfortable with the way the market is heading right now? I mean, is this bad news, or is there a crash imminent?
Yeah,
or,
no, I don't.
You know, are we heading in? Are we necessarily heading into the next cycle, or is this just normalization of a previously overheated market?
Good question. I think that I'm comfortable with the market fundamentally as long as the job market stays strong. And the reason for that is because
Good caveat.
in the Bay Area, we do have a healthy employment environment. We have very low unemployment. And yes, I knew at a certain point, and I think a lot of people knew at a certain point, that the home price appreciation was just not going to keep pace with wages. I don't even care if they were aggressive wages or bonuses or whatever you want to call it. At some point, that was going to plateau. But I see this right now, and this is a conversation I've been having with a number of buyers. You know, Warren Buffett had that saying. You know, he had a number of really good ones, but one of them was when other
Yes,
when other people are greedy, be scared. When other people are scared, be greedy. And if you have some fear in the market right now, I think if you're a committed, dedicated, approved buyer, this might actually be a really good opportunity. Does it mean you may hit the top of the market? Okay, yeah, I mean, you may make the wrong call market timing wise. That is not really within your control. What is in your control? Can you afford the house? Do you like the house? Does the house give you what you need? If all those fundamentals are lined up and you can afford the payments, then I think you have an opportunity, whereas other people will get a little bit lucky.
All right, we're going to cut to our first commercial break here. Before we do, I want to make a quick mention here. I've been getting phone calls on this, and I'll probably get some more phone calls. There is a bank that is paying 1% on savings accounts right now.
Wow.
That's liquid. You don't have to tie it up for a year.
Right.
But you gotta either call 888-912-1190 and ask, what bank is that? Or you can email me, edward@bestofinvesting.com.
That's great.
Which bank it is. They don't want me to advertise it right now with their name. But they say you can go ahead and make a mention.
People are clamoring over 1%.
I know, it's not crazy, but they are.
Well, in the next segment, I'm going to share with you some data that will make you reconsider whether you should also be clamoring
That's
for that
right.
1%.
Okay, very good. All right, so here's our first trivia question. These are all sort of sports related.
Okay.
After retiring as a player, which team did baseball great Babe Ruth spend 1 year as a coach? The first caller with the correct answer was a free 3-day, 2-night stay at the Lighthouse Resort. Call 888-912-1190. Don't touch that dial. We'll be right back.
How about we jump into what the major stock indexes have done over the last 12 months?
That's a great idea.
July 1st to July 1st.
That's a great idea.
And then we can do email and section 3, and then we can finish off with more real estate. Numero 4.
Sounds good. Sounds good. July 1st will be kind of a big one because I got to pay for 5 weeks and the gill. Just be prepared. That's good. We got what, 17, a little over 17 in the fund, right?
Not quite 17 yet. We're at 16,750.
Excellent.
Yeah. About 1.3 million of that is sitting in the subscription account right now. It just all came in at once. Last 2 weeks.
Crap. That means I gotta wait on my money too.
Yeah, I know.
But there might be some that
I'm
are
hammering
not good.
Rick to find me some good deals.
Yeah, but there may be some stuff that's not good for the fund that would be good for me.
Absolutely.
Okay, here we go. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hahn and Rob Spinoza. First trivia question: after retiring as a player, which team did baseball great Babe Ruth spend 1 year as a coach?
Was that his player coach year, or did he coach only?
Gosh, it's a great question. He I
Well, it doesn't
think he
matter.
was
I know
just
the
a
answer.
Philadelphia Phillies?
No, Brooklyn Dodgers.
Oh.
What was the
1938.
Bob?
Right?
Yeah.
Okay, Mark, you kept us in suspense over the
Well, it's the end of June. We're
Incredible.
virtually halfway through the year, and I thought it would be interesting in prep for the show today to go back and look at what the major stock market indexes have done for the last 12 months. Basically went back to, July 1st of 2015 and see how good the returns have been for those people who have been in major market indexes. So the major stock indexes, according to the Wall Street Journal, are, of course, the Dow Jones Industrial Average, those 30 benchmark stocks. Then you've got your S&P 500, your 500 stocks. Of course, there's the NASDAQ, the tech heavyweight. There's also the Russell 2000 with
Small
2,000 stocks, your small cap. Well, so for the Dow Jones Industrial Average, 1 year ago was at 18,000. Where is it today?
18,000.
18,000 for a 0% 12-month gain. The S&P 500 last year, 2,100. Today, 2,100.
Wow.
0% return over 12 months. NASDAQ, 5,100 on July 1st last year. At the end of June, it's at 4,800 or 4% down.
Well, it's funny, though. I remember back in 1999 to 2000, the NASDAQ hit 5,000 for the first time. So if you invested then, and you're talking about 16 years later,
buy and hold.
basically.
Right,
Yeah.
4,800. The Russell 2000, down 9% in a trailing 12 months. Now, if you want to feel good about your stock index portfolio performance, just go and look at the Japan. How do they pronounce that? The Nikkei.
Nikkei. Yeah.
It's down 22% over the last 12 months. The Asia market down 9%. I stopped there because it got too depressing. So I didn't bother.
So 1%
bother
the bank
looking.
sounds pretty good.
Yeah, so 1% the bank sounds pretty good, and of course, for listeners to the show, know that at Pacific Private Money, we have a mortgage pool fund secured by a loan portfolio with a weighted average of just 55% loan to market value, and that fund has been paying 8% religiously for the last 36 months.
The reason I'm cheering is because I'm an investor in the fund. Thank you very much.
But and we'll talk a little bit more about the fund a little bit later before the show's over. But that was actually surprising to me. I didn't realize that. We kind of know that the stock market's been flat. But what's really interesting, I went back on show notes from a year ago, and there was actually a July article in Forbes magazine that predicted underperformance of the stock market in the coming years, plural. But just that guy's looking, pretty bright right now, because at the time the stock market, there wasn't really any indication that would lead one to believe that it would be exactly where it was in 1 year.
Well, I think the other thing about the stock market, if you look at it annual, July to July, which I don't think a lot of people look at July to July, I would be willing to bet that a lot of people made rash decisions in January and February when the market was down as far as it was down. So I mean, if you're flat now, you may be lucky, because I bet a lot of people got out when it got really rough there for a bit.
Well, and you're talking about people who are successful at market timing, and it's funny because the radio shows I listen to from Stock Pros would suggest that most people actually do worse attempting to market time.
Yeah.
They're just not, unless they're following advice of a market pro that's literally telling them, look, stay in or get out. And I don't know that there are that many market timers out there right now that are very successful. The problem is there's just so many variables you just really can't.
Well, look at what's happening right now with Brexit, right? I mean, this vote could go either way, and we're like our industry is on pins and needles because if they exit the union, that could create a real flight to safety, and that would be good for bonds, and that would be good for mortgage rates. Yet on the other hand, what does that say about the union?
It's funny. We just talked about market timing. I always thought it's interesting. People say, okay, don't time the market, right? You can't beat the market, but
Right.
don't time it,
Right.
But then I thought, okay, but people who have a diversified portfolio, and then they say, okay, well, we need to look at the portfolio because we may be too
Exposed.
heavy.
Yeah.
Exposed, too heavy in one. That means sell that and buy something else. What
Right.
did you just do? You just timed the market.
Well, right. With a different definition, I think. Yeah, exactly.
I mean, maybe timing is either in the market or in cash versus just trading from one to another. But you're still timing because, bonds are strong now. No, the European.
Yeah, I see where you're
strong.
going with that.
See what I
Right.
mean?
Right.
Well, the other aspect of the stock market is I doubt that many people, went from having no stocks to going all in on July 1st of 2015.
Right.
And quite frankly, we know that after the market meltdown in 2008, the stock market indexes were all substantially down. So if you were lucky enough to be going into the market and investing into the market since its last low, you've seen over the last 5-6 years some pretty decent returns.
Absolutely,
But here's the problem: is that a lot of people lost a lot of value in their real estate holdings, in their stock holdings, and other holdings, 401k, etc., because of what we talked about, not being able to market time. They were maybe all in 2006 and 7, and then 2008 October comes and we get hammered. So it's really, just in general, unless you were lucky enough to go out of the market before it crashed and then go back in at the low. And again, I'm sure there are people out there that said, "Hey, I did that and things are great."
I think they're in the minority.
They're in the minority. So the real question is the stock market just overall, if you go back the last 10 years, how has it really performed for you?
Well,
have you been just have you been ignoring the indexes, ignoring the media, just putting money in on a regular basis and looking forward to average growth?
Okay, so I figured this out.
Yeah.
If
Edward's got, for the viewers at home, Edward's got one of those smartphones.
Yeah, it's a time calculator.
Uh-oh.
Now, this is assuming that you got into the stock market when it was at 10,000.
Okay.
All right, fair. That's a fair number, right? Not too high, not too low.
Okay.
Compared to what it was.
Goldilocks number.
And it was 8 years.
Okay.
Right, because 2016 and 2008.
Okay. Right.
I don't know if these numbers are 100% accurate with saying, okay, we got in at 10,000. But let's just assume that. And now it's worth 18,000.
Okay.
That's 80%. Your rate of return was only 7.62% compounded annually.
Yeah.
And if you compound
Well, that 8% private money fund, private mortgage fund is still sounding pretty darn good, because at least you can sleep at night not worrying about whether news of the Brexit vote is going to go one way or the other.
The monthly return is only 7.37.
Yeah.
So, which is still better than a bank right now. But it's not this. Oh man, I was so smart. I got in at 10,000.
Right.
It's worth 18,000.
Right.
I must have made like 20% a year.
Right.
No, you only made 7.3%.
So you're talking about July to July. That's an interesting stat. I didn't look at it that way, but one of the things I routinely do is I go through my entire book of clients and I look at where their rates are, because there may be opportunities for them to do things that would save them substantial amounts of money, either through refinancing or restructuring their debt, whatever it may be. You go back to this time last year and lo and behold, flat to where we are right now.
Right.
More or less.
That's interesting you say that mortgage rates are where they were a year ago, which nobody thought was going to happen. We all thought we were going to be at 4.5%, maybe even 5%.
Right, exactly.
At this time. I just read that in the mortgage market, I saw some statistics that say we're at, and I think this was for May, 38% of all loans originated in May, and I think this is nationwide, were refinances, and that's the lowest amount in 2 years.
Yeah, you know what? I would back that up. I think that's kind of what I've seen too, kind of a 60-40 ratio on
Yeah.
purchases to refinances at the top point this year. I don't think it's much beyond that. We haven't had a real run of substantially lower rates at any point during this year like we did early 2015. But the other thing I will add to that is, you know, a lot of people will call, they'll hear things on the news, they'll hear advertisements, and rates at 3-year lows. It depends, and it really depends on a number of things. Number one is where is the base rate that we're working off of, usually a mortgage bond or a treasury note or something like that. But one of the things that's changed a lot over those 3 years has been the cost of compliance, which weighs very heavily on the rate available to the consumer.
Yeah.
So I know we've talked a lot on the show about how these regulations were put in place to protect the consumer and make sure that people don't go back to the irresponsible ways of the past. But that comes at a really high premium, and it's not always a good premium for those that are otherwise creditworthy or manage their own finances well. And that's what we've seen a lot of, which is unfortunate because a lot of times you get people that call in and they'll say, hey, you know, I've got this pretty good loan, but I'm looking to take $100K out. I want to do a remodel of my house, something like that. And yet you go and you price them out. It's like, wow, the 10-year treasury note is lower than it was when they took that loan, but the rate is higher because the cost of compliance is built into that note rate.
All right, guys, we're going to come to our second commercial break. When we come back, we got some very interesting emails for you guys. Second trivia question. In Olympic competition, what must be 16 feet, 3 inches long, and 4 inches wide? Call 888-912-1190 to answer that question. We'll be right back.
16 feet, 3 inches long, and 4 inches wide.
I gotta go to school to learn how to speak, so I don't lose my voice. That's terrible. I just don't know how to do it.
The title of one of the articles was talking about the 60-40 ratio and how looks like it's trending downward. Is how much is left to refi?
Yeah,
which really, you know, there'll always be that percentage of people who will refi because they new equity, you know, higher income, you know, maybe because apparently there's still, I forget what the percentage was. It was a fairly decent percentage of loans nationwide that are above 4.5%.
I have one on an investment condo that's like 5.5.
Yeah, like there's
I can't
like
do
40%.
anything with it.
Yeah,
I've tried everything in my book. I can't do anything with it because the project is in litigation. Or actually, no.
Yeah, that would make sense.
The project is not in litigation anymore, but it has a single entity that owns more than 20% of the units, and it has a high investor concentration, and it's an investment property for me.
If they sell the 20%, they're going to crash the market. Yeah.
So it's
right. Got it. Okay, ready? Well, welcome back to the Best of Investing. One more time, I'm Edward Brown, your host, along with Mark Hahn and Rob Spinoza. Second trivia question. In Olympic competition, what must be 16 foot 3 inches long and 4 inches wide?
Is it the pole vault pole?
4 inches wide?
Yeah,
that's a pretty big pole
I was going to think the top bar of the goal in a soccer goal.
Oh, that would have been good, but 16 inches.
A javelin.
16 feet?
No. It's a balance beam.
Oh, okay.
Okay. Email time. Mark says here, if I get a commitment letter from you to fund a loan, how do I know you'll perform?
You know, that's a good question. And it's a fair question. For anyone who has worked with a private money loan broker any time in the past, they may have worked with a broker that you know, maybe has a limited number of investors, and quite frankly, most people who start out in the private lending business, that's exactly how they start out. They have a small stable of high net worth individuals who like to invest in notes and deeds of trust, and they become their source of capital. But the challenge is when you're small you know, if your investors don't like the loan, you might like it, but if your investors don't like it, you're kind of out of luck, and you're going to have to make that call to your borrower and apologize, and I guess, you know, move on to the next potential deal. So when I started Pacific Private Money in 2008 and 9, first of all, the market was
very
pretty
different.
crazy back then, very different, and a lot of the high net worth guys that I was going to were kind of shell shocked from what had happened, what was happening in the economy, and many of them were sitting on the sidelines. So it was actually really tough for me to get momentum initially. It wasn't until like 2010 that I got any kind of momentum in the business. But even back then, there were deals where I told somebody, hey, I can greenlight this deal for you, and yet I come to find out that none of my investors like the deal. So that is a risk you take when you work with a small company. Fast forward to 2016, and Pacific Private Money has a database with close to 500 investors, of which 200 are active and maybe 50 are kind of our go-to people. And so we have, in fact, I can't remember the last time we left someone at the altar, so to speak. When we greenlight a loan, we know what a good loan looks like. We know what a fundable deal looks like, and we know that we have enough investors that any number of which there's going to be a certain percentage of those investors that are liquid and looking right now, and we know that enough of them will trust our underwriting and our track record and our background.
But you also have an additional advantage.
That's number two, right? Number two is we also have a fund now, and many mortgage brokers, private mortgage brokers, don't have a fund. They're relegated to only using individual investors.
So you can fund off the funds.
Right. So we have kind of the best of both worlds. We have a mortgage pool fund, which is growing. We just hit 17 million recently in assets under management with a goal toward 50 million. And most of that money is lent out right now. So if I got $1 million loan request tomorrow, I probably couldn't put it in our fund unless I got a payoff within a few days. So what do we do then? Well, we just go to our stable of high net worth guys who are salivating for quality loan deals right now, because quite frankly, there's actually a lot more money, private investor capital out there looking for quality notes to invest in. There's more money than there are deals to be had. That's a fact. But even with that being a fact, it's only a fact for brokers who have a database. You got to know who those people are. You have to have established a reputation with them. They have to trust your ability to A, underwrite, and B, to properly document, properly disclose. Hey, we're a regulated industry.
Right.
This is not a back of the napkin, I'll lend you $100,000 and you pay me when you can, or I'll foreclose on your property type of thing, like it might have been 20, 30 years ago. We're a highly regulated lending platform these days. And so how do you know we're going to close? Because based on our reputation, we just don't leave. We know what a fundable deal looks like, and we can and will close when we say we will.
This is a direct parallel with my line of work, even though what we do is very different. We're lending money, but the way we do it is very different. I call it a loan intuition. So basically, when a deal crosses my desk, I get a sense, I might not know every single detail of the deal just yet. I'll get to it, but I may not know it right there and then and there, but I know that deal is real or not. And I know that based on Fannie and Freddie guidelines. I know that based on portfolio guidelines. I know that based on all of the jumbo investors we work with, their guidelines. And somewhere in the back of my mind, and I don't know where it is, it's
where you know where your mind is?
that either. It's doing this Terminator thing where it's like the red lights are flashing and it's lining up the whole deal, and it's saying, what was it when he finds Sarah Connor? It's like identity, whatever.
Right,
the lights are flashing. That's what happens when a deal comes across my desk and I know it's a real deal. And I bet you, with all of those investors, you have a sense of what they're looking for, and I think that's likely what differentiates you between your competition, is that not only do you have the relationships, but you also have the wherewithal to know that deal is going to match with someone in that pool.
Well, and in your case, Rob, you're a mortgage broker, and you have many conventional mortgage brokers like yourself. You've got a book of business, you've got a team. You and or your team, you've taught them what a fundable deal looks like.
Right.
Same thing with the Pacific Private Money. I've got a team of underwriters. They have a vast experience in loan origination, and they know what a fundable deal looks like, as opposed to those brokers out there, and this is why you really need to shop around. You need to check references,
Agreed.
ask around,
Agreed.
because there are guys out there that will say yes to
Any deal.
anything, to any deal.
And the opposite's
both
true, too.
conventional guys and
Yeah.
hard money
Yeah.
guys, and then leave you hanging.
Right, and the opposite's true too, where you'll get a negative Nelly who knows everything. It's like, that'll never. It takes some gumption to get deals done in our industry because it is so regulated. You've got to have the confidence to say this is a fundable deal because the timeline may be very tight, the consequences may be very high, and you have to go to the borrower and to the borrower's agents. You have to say, I realize we may encounter some challenges along the way. No real estate deal is not complex these days, but this is a fundamental, structurally sound deal that will get done. And if you don't do that, then I think you're not worth what your people pay you for.
So for more information on if you're interested in the types of loans that we make, if you need a bridge loan or a short-term loan, a rehab loan, if your bank is telling you no, or you're in a certain real estate transaction where time is of the essence, and for whatever, if there's any reason whatsoever that bank financing or conventional financing is not going to work for you, you need to check us out, pacificprivatemoney.com. Also, we talked a little bit about our mortgage pool fund, which is paying our investors right now just a couple of tick marks over 8%, and has been doing that consistently month in and month out for 36 months now. For more information on how you can earn 8% or more on your savings or IRA money, take a portion of your retirement portfolio and put it into an alternative high-yielding asset investment strategy, give us a call at 415-883-2150, or again, just go to our website, best place to find out information about how to borrow money or how to invest money, pacificprivatemoney.com.
All right, and Rob, an email for you.
Oh, wow.
Says, my summer travel plans are going to conflict with the close of my refinance.
Speaking of refinances, yeah.
Can I use a power of attorney to sign my own documents while I'm away?
Good
My lender is telling me it is not possible.
It's not possible if that's a cash-out refinance. I can tell you that right off the bat. So the vast majority of lenders will not allow a power of attorney on cash-out refinance. Too big of an instance in the past of take the money and run. So power of attorney, you can use power of attorney on most other types of transactions. However, it can't just be the power of attorney that maybe you signed with your estate planning attorney, a general power of attorney. It has to be a specific power of attorney prepared for the transaction, typically by the escrow company. And what needs to happen in the case of a residential transaction, we see this frequently, when people know they're traveling and then one borrower will be signing for another, or they need a power of attorney to sign for one of the borrowers, is the initial application must be taken by the borrowers. So you can't have the whole transaction done by power of attorney. Somebody needs to be there that's really, yes, this is the deal I'm looking to get. And then the power of attorney is prepared from there. We get the notarized document to show that there's an identification form. You get that notarized, and then that person will go in and sign for the person missing when they come across the close of escrow.
Very good. So, Rob, you are the man when it comes to conventional refinancing. How do people get hold of you?
We can help all things 1 to 4 units, all things primary, secondary, and rental property, anything residential, jumbo, conventional. I am at RPM Mortgage in Mill Valley, 415-367-5959, about 10 minutes north of the Golden Gate Bridge. Look me up online or on the Best of Investing website.
There you go. Third and final trivia question. Who was the first Rookie of the Year in baseball? All right?
Oh, God. All right.
You've heard of this person. It's nobody from the 1800s.
Yeah, no. I figured it was newer than that.
All right. The first email with the correct answer is going to win that free 3-day 2-night stay at the Lighthouse Resort. Call 888-912-1190 to answer this question. Who was the first Rookie of the Year in baseball? Don't touch that down. We'll be right back.
So we'll hit that one next.
Okay.
I did, because I don't know that I believe it. 34% of SF Bay Area residents consider leaving.
I was just reading
all
that.
the
Like, a lot of
statistics-
people are not leaving the United States and stuff, but California
Well,
is different.
Well, even in California, the California economist I listened to at CMA said, and this was end of April, he said we still have the population of California is still growing.
Yeah.
It's just
Oh, yeah,
there
that's
is
right.
flight,
Yeah, of course.
but it's white flight.
Yeah.
I'm not going to say that on the air, but it's that's the
Is that
bottom
like white
line.
noise?
Yeah,
Not really.
it's white noise. It's white flight. The Spanish population is exploding.
Which is
in
why you want
California.
to get into the lower market.
I've actually noticed it myself
Yeah.
in Marin
Oh yeah.
and
Sure.
elsewhere. I've noticed it in Novato. I've noticed it. Where was I the other day? And I'm looking around. Everywhere I looked was Spanish. The people driving up and down the street were Spanish. And I'm all,
That's what happened
Wow.
in LA.
I mean, when it's one thing when you really start to notice it. Now, when I was in Santa Barbara, that place is a little bit white,
Really?
except for the people doing artwork.
Yeah.
But
That's kind of an
wow,
odd place, though. It's
Marin
yeah.
and San Francisco, the people that are walking around the streets up and down, and because I don't know, maybe all the white people are just driving in their cars, going in and out of Costco or something, and not walking up and down the streets in Nevada. But it's just like wow.
You guys ready?
Yep.
So Rob, you want to?
I think he was going to leave with that one.
Oh, leave it.
I have 2 points, but we can start with that.
We'll start with Mark. Okay.
How much time we got?
11 minutes.
Okay.
Welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, along with Mark Hunt and Rob Spinoza. Last trivia question: who was the first rookie of the year in baseball?
Batting zero at these. What's it?
Jackie Robinson.
Oh, this is my first.
Isn't that amazing?
Yeah.
Yeah, they just happened to have, 1947 just happened to be the first time they go, let's do a rookie of the year, which is kind of amazing that they still voted for him with all the, color barrier situation.
Tells you how good he was.
Yeah,
Yeah.
just a little bit good.
Yeah.
Mark, you got some more good stuff for
Well,
us.
Rob actually brought this article in, and we were just talking about it because I saw this in the news this past week. And where did you get this from? This was from Patch.com, whatever that is. Paradise Lost. 34% of San Francisco Bay Area residents consider leaving. Now, if I recall, Rob, this is from a poll, right? Was this a poll?
I hope they do because the traffic is crazy.
Well,
let's turn the page
so,
here. There you
So
go.
34% of San Francisco Bay Area residents consider leaving. Well, I think that speaks more to the Bay Area residential sentiment more than are they actually leaving or will they leave? Because again,
They're thinking about considering.
the thing about considering, the bottom line is traffic is terrible.
That's
in the Bay Area.
that's number
And
3, right?
housing prices
it?
are very
That's number
high.
1.
There's affordability issues.
two.
There's traffic and affordability. Crime is actually going up, and culturally, the mix of Bay Area residents are changing considerably, and that's certainly not a bad thing, but it scares some people.
Yeah.
And let's just face it, there is a flight among a certain type of California resident going on here. But it's funny because I just reminded you guys off the air when we were discussing this topic here that I listened to a California-based economist at the end of April say, look, don't believe what you read in the media. California is continuing to grow in population.
Yeah.
So that part is true. What's the rest of the story is the mix of how the culture of California is changing.
Right.
There's an influx coming in, but there's also an outflow, and it's changing the face of California.
You can't have a conversation about Marin real estate, which is the conversations I have 99% of the time, other than the 1% when my wife is telling me what I should be doing.
Exactly.
Maybe it's more than
It's only
1%.
1%.
She doesn't listen to the show. That's okay.
Why is that? None of our wives listen to it. I've heard you.
I've made my wife listen to one show.
That was
We've
it?
done like 300 shows,
That was all
right?
it
I
took.
made her listen to one.
No, you can't have a conversation about Marin real estate without people talking about the traffic. They're like, I'd love to live in San Anselmo. Oh, but the traffic. Sir
I
Francis
grew up in
Drake.
San Anselmo.
Right.
I wouldn't go back there because the traffic.
The traffic's so bad. It's
Yeah.
one way to get into San Anselmo,
Yeah.
and then you talk about Nevada. Oh, Nevada, it's sunny. Traffic is so bad.
All the crime's going up. All kinds of weird stuff's going on.
But traffic is a big problem here because of the way the county is laid out, and this is not unusual for the Bay Area because you have hills, you have geography, you have topography, whatever you want to call it. But traffic is a big factor. Cost of living. I mean, come on, you guys have to know this as well. My dad lives in Illinois, and you tell him what we pay median home price, and they choke on that number. I mean, it's unfathomable that somebody could pay that amount for a
Yeah,
house.
but you also have to look at the wages, and but it's a percentage of your income
Of
that's going
course,
towards
of
housing.
course, and these factors. I mean, I talk to people routinely who say, you know what, we're thinking about moving to the Pacific Northwest. You know, Oregon, Washington,
Which
calling
happen to
them-
be the number
Yeah,
one
yeah.
appreciating
We
market
have branches
right
up there, I
now
know.
is in
Yeah.
Portland and Seattle.
Yeah.
Again?
Yes.
It was like
Yeah.
that in the early 90s.
But didn't-
Right, there's 3 cities that are double-digit appreciating still today. San Francisco is not one of them.
I would
it's,
believe
it's,
that.
It's Denver, Portland, and Seattle.
Yeah.
Those are the 3 cities right now that are on fire. But
Yeah,
so you're
it's-
right. The people are moving that direction.
You know, though, I think that all things considered, you look at the Bay Area and what it has to offer, and I don't think people are getting a raw deal. I mean, we are paying a high price to live here. There are factors that are getting increasingly more difficult to deal with, traffic one of them. But on the other hand, you have a world-class city, you have strong employment like we talked about earlier, you have a desirable area to live, and all those things in, what I see as the modern U.S., those things cost a lot of money, and certainly that's the case here.
And I think this is of course anecdotal. This is just me having conversations with people in and around the Bay Area, and the people that are leaving, it's not that they don't love the Bay Area, but what they've come to realize is, I pay to live in a city where I can, or in an area where I can go into San Francisco and go into shows.
Right.
I can go boating. I
Right.
could go skiing. I
Great.
can do this. I can do that. But guess what? I'm not doing any of those things.
I don't do
So
any of
why
it.
should I pay to live here? I don't own a boat. I don't want a boat. I haven't been on the bay in years. I haven't been across the bridge to San Francisco to see a show in 10 years, et cetera, et cetera, et cetera.
It's like my wife wanted 4-wheel drive. She says, in case we want to go to the snow.
Never use it.
We haven't been in the snow.
Never use it.
Yeah.
I had a 4-wheel drive truck. I had to take it out on the dirt to actually engage the 4-wheel drive because I was afraid it would lock up.
Yeah.
So, and my wife and I have this conversation too. We've talked about, as we are in our 50s now, looking ahead, it's like, do we really believe that we will want to continue to live
Yeah.
right here in the
Yeah.
Bay
But
Area?
a place to retire.
Everything's based on alternatives. So
Right.
where
As
do you go?
opposed, right, as compared to what? I mean, I still, in my mind, I would like to think that there's another boat in my future. I don't happen to have one today. I happen to believe that I'm going to want to go into the city and to see shows, and because we're not empty nesters yet, we're getting
Right.
close. So I've got this vision in my head that we're going to do all these things to enjoy, what the Bay Area has to offer for the high prices we pay to live
Can
here.
I be Eeyore for a minute?
Sure.
It'll never
It'll
happen.
never-
Let's say that. That's
Oh, I
depressing.
just know it.
Don't even plan.
Colorado, here I come.
Yeah. What is it in Arizona right now? About 118?
Yeah.
I mean, so,
No, in fact,
I
it's
just throwing that
so
number.
hot that flights are being delayed or not taken off.
Yeah, and so there's pros and cons to everything. I think that when I have these conversations, because we're in the middle of it now, we live here, and the Bay Area is what it is. I'm involved in real estate in the Bay Area, so housing prices are what they are. We see it all the time. You toss the numbers around like it's ordinary. But on the other hand, you talk to people in other parts of the country, and they have their own set of problems. I mean, I got to be honest with you. I would rather be here in the Bay Area complaining about traffic, complaining about high prices of homes, complaining about all we have to do in the Bay Area within this, than to be in an area where you're watching people leave, where the areas are basically being abandoned.
Ghost town, yeah.
Yeah,
that's
I mean,
scary.
that's depressing. You can't find a
It's
desirable
like,
job.
you don't like inflation, but the deflation.
Oh,
is worse.
way worse.
Well,
Yeah.
and I guess I'd rather live here and know that if I wanted to do all these fun things that
I
you
could.
can do, I could.
Yeah,
Right.
But if I moved to the Midwest, I'm like, I can't. Then what am I going to do?
Well,
Yeah.
I just saw something. I didn't bring it in, but there was a map of the best places to raise a child. And just like over in Europe, what's interesting about it is it's always the cold places that have the highest quality of life, like North and South Dakota,
Yeah.
Iowa, some of the northeastern, Vermont, Washington, and then the worst states are all in the South, Texas, and then the Deep South, and then some of the Sun Belt, Nevada, of course, and places like that.
Well, I did solve at least the traffic problem because I ride the motorcycle.
There you go. Right.
So I don't. The commute
So
hour doesn't mean anything.
You have the health insurance problem.
Yeah. Okay, I can't get life insurance now.
That's right.
Well, the other part of it, Rob, you and I have family here, and we have careers that really aren't really that portable.
Right, they're dependent on relationships.
Yeah. So I'm not going to move my company. I mean, my clients are here.
Yeah.
I know the area here, so I'm not likely. I think I'm spending the rest of my life in the Bay Area, but it sure, I like to daydream about, buying a $1 million home elsewhere in the country and getting a 5,000 square foot mansion.
Actually having
You know
closet
what?
space.
That'll be your second home, right? You know, if you do well enough in business, and maybe you go 6 months there, 6 months here, whatever.
Yeah, and you see people do that, and you look at it and you go, to have the time and the money to be able to do something like that when you do have your primary residence here in the Bay Area. Yeah, it requires a ton of work.
We all use vendors that are elsewhere in the United States. In fact, the guy that does my website, who owns the company, and he actually has a successful web development company based in Athens, Georgia.
Okay.
And he lives in a big house, and he paid what we would consider nothing for
Right.
$250,000.
Right.
And they don't have wild swings, and it doesn't go up very much, doesn't go down very much. It's pretty stable.
Yeah, but
which is really interesting to think about, that you could actually have a career where you kind of know how much money you could save, and you could kind of target out maybe 2 or 3 years. Well, it's going to take me 2 or 3 years to save up money for a down payment on the house. Try doing that in the Bay Area, where the rate of appreciation, triple or quadruple higher than your pay
you're
rate,
reaching
your
for
pay
something
increase.
that keeps ever more elusive. I think the other thing too is that this show, Best of Investing, we talk about investing, things like that. We here in the Bay Area, we view real estate entirely different as an investment than people can in the rest of the country.
Absolutely.
Because you can't leverage like you could here in other places synonymously. It doesn't work.
Good point.
God bless the Bay Area.
All right, guys, we're going to cut out for the day.
At least when it's running like it is now.
Right, here's our thoughts for the day. In 1921, the New York Times decided to devote the first 13 pages to the heavyweight championship between Jack Dempsey and George Carpenter, except for a little space on the front page declaring the formal end to World War I.
Are you kidding me?
Seriously. And in the Rob, you'll appreciate this. And in the very first Boston Marathon, 15 runners competed, and only 10 finished. All right, tune in next week to the Best of Investing. We're going to be giving away more free vacations for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown. We're wishing you the best of investing. Oh,
Nice.
right on the